Hello and welcome to today's fund review. I'm Brian Williams from Northshire Consulting. Today we're going to look at the American Funds Capital Income Builder, ticker symbol CAIBX. Now there's a bunch of different share classes for this fund. We'll talk a little bit about that later. How we arrived at this fund is in our 401k and Beyond Facebook group. Each Tuesday we pick a Morningstar category. We list the 10 biggest funds in that category. And we let the members of the group decide on which fund they'd like to see us take a little bit deeper dive into. So for this week, the group has selected the American Funds Capital Income Builder. So this is what you'd consider a balanced fund, meaning it has both stocks and bonds. Historically, this fund has been around 70% equities. Right now, if you add up US equity and non-US equity, you're going to be at about 76%. So that's at the high end of the range. This fund can go as high as 80% or as low as 60% on the equity side. And that's going to be dependent not just what they think of the equity market, but also how they view that in relation to the bond market. So if they feel strongly about the equity market, it's going to be overweighted in equity. But maybe if they feel not so confident about the bond market, you may see a higher equity allocation there as well. So the bond portfolio, not insignificant here. What they try to do with this fund is they don't reach for yield or go out and take on riskier investments through the bond portfolio. What they're trying to do is add value through security selection. So that means the team of analysts and portfolio managers are looking to pick individual bonds that they think are a little mispriced by the market, but not necessarily out on the spectrum as far as risk is involved. When you look at the equity portfolio, we always look at that style box. So we know large is on the top, small is on the bottom, value is on the left, growth is on the right. So this is definitely a large cap value portfolio. So what that means is you're typically going to see stocks in here from financial services, consumer defensive. You may see some industrials or energy in there depending on the stock. What I wanted to do in this screen here is also show you the Morningstar page that has a style box and a little bit more breakdown. So while you see again their large value, they also have 35% in the blend category. So they are sort of towing that line between value and blend. But what's also significant here is how little they have in mid caps and small caps, a total of 9 overall, and how little they are allocated on the growth side. So that's important to know as well. A reminder that this video is here to provide general education. Nothing shared in this video should be considered any specific tax, legal, or investment advice, and certainly don't act on any information you see in this video without consulting with your tax, legal, or investment advisor. We are an independent advisory firm with no affiliation to the reviewed fund, and we may or may not have a position in this fund with client assets. Key data here, this fund has been around a while, since 1987, does have a significant number of holdings at over 1,500, almost 1,600. You'll see that from balanced funds just because they have to play in so many arenas. So bonds, US equity, international equities, that number of holdings adds up quickly when you're playing in those spaces. And like a lot of the American funds, this is a really big fund. So you see a lot of these American funds, the way they're run is they're split up into different sleeves or segments. So one team will run, maybe 10% of the portfolio, and then they split it up that way to prevent sort of that key manager risk. So you don't have that fear with this fund and American funds as a particular fund manager moving on or retiring, even though they do have, obviously leadership teams, but they have a good farm system of growing that analyst team and ultimately growing them into portfolio managers. So this fund is an actively managed fund, meaning that they are picking and choosing which investments and how much of those investments go into the fund, as opposed to being a passively managed fund or called an index fund, where you're trying to follow a list of stocks based on a particular set of rules. So typically actively managed funds are a little bit more expensive than passive funds, only because you have that added expense of those portfolio managers and the analysts. When you look at the top 10 holdings, this is as you'd expect. Overall, the portfolio does have an overweight to financial services and that consumer defensive space. and underweight to compared to their category to industrials and to the consumer cyclical market. But in the top 10, you have some technology in there in Microsoft. You see some financial services in there with JP Morgan, and TD Bank is in there as well. So a pretty good weighting here in the top 10 holdings. If you were to add that up, you're going to be around 20% or so. So they are making some significant bets from a balanced fund standpoint in their top 10 holdings, but you'll see some US and some foreign stocks in here, of course. So we talk about share class a lot. We want to always make sure that if you have a lower cost share class available to you, that you're taking advantage of that. American funds, they have a lot of different share classes. That you see the 529 share classes, you see the R share class for retirement, you see the traditional A, B, C share classes out there. You'll also see the F share class, which is typically sold through advisors. So you look at the expense ratios, they could be anywhere from 27 basis points up to 141 basis points, 1.41%. So you want to pay attention to that in your own world from an investment standpoint. Make sure you're getting those low cost share class, but also as we move through this exercise, because we picked the A share class, CAIBX, is 61 basis points. That's the most common share class here, so it's what people are familiar with, and it falls pretty much in the middle of the lineup here on the expense scale. So as you're looking at the performance numbers here, remember that we're taking that A share class here for the example. So the A share class, like we said, is 61 basis points, $6.10 for every $1,000 invested. The world allocation category average is 90 basis points. This is one of those categories that tends to be a little bit more expensive. Anything with some foreign exposure is going to be a little bit more expensive than if it was just US based. And when you figure that they've got fixed income and equities in here, that's why it tends to be a little bit higher of an expense category. So when you look at those expenses, you want to say, okay, well, what am I paying for? How does this fund compare to its peer group? So they've kept pace with the peer group. They've outperformed 5 out of the last 10 years. They're going to underperform when there's a really strong stock market, especially on the growth side, which we had in 2020. But also from a fixed income standpoint, they're going to underperform when those junky or those higher yield bonds tend to outperform. So when credit quality isn't as important to investors and they're chasing that yield, this will be a fund that underperforms a little bit. But in times when value does start to outperform, which we may or may not be in one of those periods right now, but there are those periods, this fund will do a little bit better than its peers. So we don't know when you're watching this video. We always encourage you to go right to the source documents, look at americanfunds.com. There's some great information there. You can also always go to morningstar.com, which we feel is a great resource to look at this fund and do some of the comparisons that we talked about here. Just a couple more quick notes before we get into how we rate this fund. This is a fund that really does play into the strengths of American funds. They're known for some of their balanced or allocation funds. American Balanced is a fund that it's been around a long time and is a pretty popular fund. Also, American funds do well in the target date fund space. So you'll see them in a lot of retirement plan lineups. And even though you don't necessarily think of them that way, target date funds are essentially balanced funds. They're balanced funds that have both stocks and bonds in there with some international. American funds, domestically and foreign, they're not known for small and mid caps. That's not a strength of theirs. So it's certainly no surprise to see that some of their balanced funds like this not have any allocation to mid and small cap in there. So these type of funds really do play to American fund strength. So if you're watching this on YouTube, we again encourage you to check out our 401k and Beyond Facebook group. That way you'll have a say in which funds we talk about, and also you can send us some questions ahead of time if you'd like. We like American funds because of their active management and that you do have some really low cost share classes available here. We take it down a little bit on the risk grade because even though a B is not that bad, one of the things that's we talked about before is that it is missing some of the small cap, it is missing some of the mid cap. So a lot of times people will use this as sort of that one size fits all fund, and you could, but you would be missing some things there. Overall, we give this fund a B plus, which is a very good fund rating, and we hope you enjoyed this video. Again, join our Facebook group and check us out on YouTube if you haven't yet. Thanks.